An ETF that tracks the S&P 500 is arguably one of the best stock market investments you can make. A big claim? Well, history has shown that it's been a great place to put a large amount of money, and this is because as long as you have a long-term time horizon, it's relatively safe and it's an excellent way to compound your money. This truly is the secret of how to build wealth, and it's by using the power of compound interest. Over the last 5 years alone, the S&P has gone up almost 100%, giving a near 20% average per year. Warren Buffett has even said that when he passes on, he will likely put all of his investments into an S&P 500 index fund. And in fact, there's more. The S&P 500 is widely used to represent the US stock market as a whole, so it's also a great tool we use for benchmarking. So as you can see, this isn't just another ETF. It's actually quite important. And so the question becomes, what is the best S&P 500 ETF? Well, I'm glad you asked, as this is the topic of this video. My starting point is always to take a look at what the big investors are doing. Ray Dalio is one of the best investors in the world, and he created the largest hedge fund in the world, Bridgewater, and he also happens to be a fan of the S&P 500 ETF. So here's the plan. I'm going to show you the 2 ETFs used by Ray Dalio. I'll then show you a great option from Vanguard, and I'll also include a great option for UK and Europe people too. As always, if you do find anything useful in the video, don't be shy, be sure to drop a like. That would be much appreciated. Okay, sit back and relax guys as we find out what is the best S&P 500 ETF. Okay, so here is what we've got coming up. We're first going to take a look at the S&P 500 itself, because if we're going to be investing in the S&P, it's always good to know a bit more about it. We'll then take a look at the 2 ETFs used by Ray Dalio's hedge fund, Bridgewater Associates. We'll then take a look at a great US and UK option from Vanguard, and then we'll bring it all together and summarize everything at the end. First up, a little bit about the S&P 500, and here is an excellent long-term chart of the S&P, and this goes back almost 100 years, and it gives us some incredibly rich information about the S&P's history. So this peak here was in 1929 before the big Great Recession, and amazingly it took the stock market almost 30 years to get back to the highs of 1929. It peaked out again in 1970, and interestingly there was another 2 lost decades that it took to get back to its all-time highs. We then had this huge run-up, which was the dot-com boom and dot-com crash. A nice run-up to the 2008 financial crisis, which again followed by another huge crash. And then just take a look at this vertical jump that's been happening ever since. And now the S&P is all the way up here. So an incredibly rich history. So a bit about the S&P. It was put together in the 20s, but the 500 companies was completed in 1957. And it's made up of 500 of the largest companies. So that's not the 500 largest, it's 500 of the largest companies. It's a market cap weighted index, meaning there's a strong weighting towards the top 10. In fact, the top 10 companies in the S&P make up almost 30% of the index. And this is also one of the biggest things that people complain about, is that it's very heavy in the top 10, because it's then 470 companies that make up the rest. It's also used to represent the US stock market on a whole. And since inception, the S&P has given a 10% average annualized return. Here's a bit more on the returns. So this is a great chart, as it's the S&P 500 historical annual returns. And this goes back all the way to the 1960s. And you can see there's been a few years where it's given over a 30% return. So one here, one here, one here, one here, one almost here. There's quite a lot of years where it's gone and given a 20% return. So this has happened a number of times, which is really, really good. Often gives over a 10% return, and this was the historical average. And you can see there's been a few years where it's been negative 10 and only a couple of times where it's been a negative 30 and one time negative 20. So this is a great snapshot of the performance of the S&P. Okay, so that was about the S&P. Now let's take a look at the two ETFs used by Ray Dalio. So I first discovered these when I was breaking down the portfolio of Bridgewater Associates. As you can see, it's made up of some major positions, made up of ETFs and individual positions, and then lots of minor positions which I've grouped together. This is an $8 billion portfolio, and you can see the largest position used by Ray Dalio is an S&P 500 ETF. This is the one by SPDR, SPDR, and the ticker symbol is SPY, making up almost 20% of the portfolio. He then has 15% in a gold ETF. He's got an emerging markets ETF. Largest individual position is Alibaba, another gold ETF, and then another S&P 500 ETF. This time, this is the iShares Core S&P 500, ticker symbol IVV. So what we'll do is we'll take a closer look at SPY and IVV and see what the differences are. First up, SPDR S&P 500 ETF, ticker SPY. So this is pretty much the sectors of a typical S&P 500 ETF. As you can see, the largest portion is technology at almost 34%. Next biggest slice is consumer cyclicals, a big chunk in healthcare, financials, and industrials. And you can see it has a very small weighting to telecommunications, a very small percentage into energy, basic materials, and utilities. Looking at the top 10 companies that make up a typical ETF, and it's all your big powerhouse technology companies. We've got Apple, Microsoft, Amazon, Facebook. Tesla was the new addition that got lots of media attention recently. We have Google, Berkshire Hathaway, Johnson & Johnson, and JP Morgan. And as you can see, the top 10 make up 27.5% of the total index. This is a 5-year chart of the S&P 500, so you can see the recent performance has just been excellent. And look at this for a growth line. It's consistently grown year on year for the last 5 years. A bit more about the SPY fund. So this is actually the largest ETF in the world. Assets under management is 334 billion. The number of companies is not actually 500, it's 506. It pays out a dividend of 1.48%. The fee is really low at 0.09. And year-to-date performance, even though we're in the first month, it's already grown 4%. And as you can see, it's grown 98% in 5 years, giving an almost 20% average. So recent growth has been excellent. And the second ETF used by Ray Dalio was the iShares Core S&P 500 ETF, ticker IVV. So let's compare these two and see how they stack up. Well, this was the information that we've just seen, so let's compare it and see if the iShares ETF may be better. So the size, it's actually the second biggest ETF in the world at 242 billion. So size-wise, it's still going to give you everything you need. Similar, made up of 506 companies. The dividend, interestingly, is slightly higher, 1.53. And this will just be due to a slight difference in the makeup of the index. The fee is excellent, 0.04, so it's actually lower than SPY. And I've put the year-to-date performance and 5-year the same, as the difference is going to be so small it's negligible. And I would say due to the slightly higher dividend and slightly lower fee, for most people watching this, IVV is going to be better than SPY. Okay, so here are two great options from Vanguard for the US and UK. So this is another great way to find out what the best ETFs are. So this is a very, very useful table. This is the largest ETFs in the world by assets under management. So you can see there's about 12 here, and the biggest ETF in the world we just looked at, which is SPY, followed by IVV. We have a Vanguard Total Stock Market Index is at number 4. Number 5 is VU, so this is what we're going to look at in a second, as it's Vanguard's S&P 500 ETF. We have a great tech ETF, developed markets, we've got an aggregate bond, emerging markets, GLD is the biggest gold ETF in the world, and then we have Vanguard's total bond market as well. So these are some great ETF options in general. So because the next biggest ETF was the Vanguard S&P 500 VU, let's take a look at this. And we'll compare it against the UK equivalent, which is VUSA. So VU, the size, again, a massive ETF, 184 billion. This time it's made up of 513 companies, which is interesting. Dividend is really good at 1.5. The fee is incredibly low at 0.03%. In fact, you won't see many ETFs ever get below this. And then the year-to-date and 5-year performance is going to be similar to the others. And for people in UK and Europe, we have VUSA. So obviously, it's going to be a lot smaller, 27 billion, made up of 505 companies. Dividend is slightly lower too, at 1.33. Fee is low, but not as low as VU at 0.07. And year-to-date and 5 years going to be the same. So I would say, of all the ETFs we've looked at, for the vast majority of people, VOO is going to be the best for US people, and VUSA is going to be the best for UK and people in Europe. So there you are, guys. Those were some great S&P 500 ETF options. As you saw, the S&P is not just another ETF. It represents the US stock market on a whole, and it's the main thing we use to benchmark against all our other investments. In fact, if you could only choose one ETF out of the thousands available in your lifetime, it would likely be an S&P 500 ETF. As you saw, we looked at the two ETFs used by Ray Dalio, which were SPY and IVV, followed by two great options by Vanguard, which was VOO, which is probably the best one for US people, and also VUSA, which is probably a great option for UK and Europe people too. So I hope you found this useful. In fact, if you did find anything useful in the video, if you wouldn't mind taking 2 seconds to drop a like, that would be much appreciated, as every like does help. If you haven't yet subscribed, then be sure to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.